Ladies and gentlemen, good day and welcome to the Q2FY22 Earnings Conference call of Marksans Pharma, hosted by Centrum Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Cinderella Carvalho from Centrum Broking Limited. Thank you, and over to you, ma'am.
Thanks, Margaret. I'm Cinderella Carvalho. Welcome you all on behalf of Centrum Broking on the 2QFY22 earnings Concall of Marksans Pharma Limited. At the outset, I thank the management of Marksans Pharma for giving us this opportunity to host the call. From the management team today, we have with us Managing Director and CEO, Mr. Mark Saldanha, Chief Financial Officer, Mr. Jitendra Sharma. Now I hand over the call to the management for their opening remarks. Over to you, Mark.
Thank you, Cinderella. Good evening, friends. Hope you and your families are safe and doing well. It's my pleasure to welcome all of you to the Q2F22 earnings call. Let me try and keep the prepared remarks short so that we can spend some more time in taking your questions. We had a challenging half year in the backdrop of geopolitical issues impacting shipments and inputs. We had a revenue growth of 3.3%, led by increasing penetration in the EU and the North American market. On the cost front, almost all our costs have increased, a sharp increase impacting our EBITDA margins. However, our net cash balance resulted in a reduced finance cost, and also we had the benefit of a lower tax outflow. Hence, our bottom line grew by 8.8% in H1 FY22. I would like to confirm that our forward integrated business model with a strong global presence is differentiated in nature. In line with this, we continue to make investments in our manufacturing and distribution capabilities. Our Goa plant expansion by adding new manufacturing lines is on track. Our R&D is working on a basket of over 12 ANDAs for the US market and around 15 RX products for the European and UK market. These steps will drive our revenue to beyond 2,000 crores in the next few years. With this, I would like to turn it over to Jitendra Sharma, our CFO, who will give you an update of the financial before we start our Q&A. Thank you.
Thank you, boss. Let me start with the financial highlights for the first half of the year. Operating revenue was rupees 710 crores, a growth of 3.3% as compared to rupees 687 crore in H1 of FY21. EBITDA was at rupees 137 crores as compared to 153 crore in H1 of FY21. EBITDA margin were at 19% in H1 of FY22 as against 22.2% in H1 of FY21. PAT stood at 108.9 crore, a growth of 8.8% year on year. EPS for the first half year was up by 8.8% to rupees 2.6. From a geography perspective, US, North America was the highest contributor at 306 crores, witnessing 1.2% growth in H1 FY22. EU, UK formulation market recorded 6.7% growth at rupees 305 crores in first half of the year. Australia and New Zealand formulation markets recorded 0.5% growth at 69.8 crores. Rest of the world was almost constant with sales of 29.1 crore in H1 of FY22. As Mr. Mark has mentioned, the quarter was characterized by higher raw material, freight and packaging material costs. I would like to give a context to these costs and other challenges which have impacted the margins. Some of the raw material costs like paracetamol have more than doubled. Many packaging costs are at all-time high. Freight costs have also more than doubled due to container shortages and increase in crude oil prices. However, our improved product mix, reduced financial costs and lower tax outgo helped us to neutralize the same resulting us to grow our bottom line by 8.8% in first half of the FY22. Our R&D spend was rupees 14.4 crore, that is at 2% of the sales, and capex for the same period was rupees 25 crores. We continue to remain debt-free as on date, and our cash and cash equivalent in the books was at rupees 322.7 crores as of September 2021. Our return on equity was almost constant, being 22.2% as on September 2021 compared to 22.8% in September 2020. Similarly, our return on capital employed was 26.4% in September 2021 as against 28.9% in September 2020. In light of the above stated uncertainties, we are unable to give any forecast. However, we are positive about the business prospects in the medium to long term. With that, I would like to throw open the floor to question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nishit Jain from Jain Family Investments. Please go ahead. We lost this line, so we'll move to the next question. The next question is from the line of Yogesh from Arihant Capital Markets. Please go ahead.
Good evening, sir, and thanks for taking my question. My first question is basically how do you see the freight cost and the raw material cost coming up in this quarter and going forward?
So looking at this, the cost impact or the cost increase has been a phenomenon which honestly is beyond anyone's control. But I don't see things improving in the third quarter in terms of the cost factors. We do see volatility still in place. The crude prices have not improved. Neither is China material coming out of China or the issues that China are facing or global issues have not improved. So I do see the third quarter also being a very challenging quarter in terms of bottom line. But if the trend continues in this manner, I would assume eventually the pricing in terms of the final product will correct and it will be passed down to the consumers. So it is only a matter of time. Obviously, if things change for the betterment, it's great. Otherwise, correction will eventually take place. But the third quarter, just to answer your question specifically, the third quarter seems volatile, and I don't see much of an improvement, at least from a cost perspective point of view.
Thank you, sir. And my next question is, we are looking for about 2,000 crores of top line in the next 3 years. So, will we maintain the margin of about 24% operating margins in the next 3 years? That is 23.
So Yogesh, we have maintained our market share. We are growing. We are optimistic about the future. Our business model still remains intact. Our efforts to ensure we hit our objectives and the roadmap is still very clear. We still do believe we will achieve those milestones. In terms of profitability, obviously, like I said, this is like a global phenomenon, which is beyond anyone's control. We don't control the crude prices or anything. And had this not happened, I mean, this we are talking about happening in the last 3 to 4 months, which has spiraled out of control, and it has a cascading impact on the bottom line, which honestly, there is nothing you could do in that short span of time. So obviously, if things improve, then great. If this phenomenon had not happened, we would have still hit our margin lines. The fact that it happened, it did impact the bottom line. If this continues, like I said, correction would be taking place. We are working towards, transferring part of this cost to the end user or to a client. It's a process by itself. So I would assume the market will correct eventually. So if the market does correct, the profitability will be back to what it was. But it is important. It is important for the market to correct, or this cost to come down. It has to have one of the two.
Sure, sir. Just one thing, not in the not maybe in the short term, but this target which we have for 2,000 crores. So, what are the range of margins in the long term which we are comfortable with? What will be the range like for the operating margin?
See, of course, we are looking at a range, say between 22 to 25%. I think that's the normal margins, and we will get back to those marks once the situation normalizes.
Sure. And finally, one question the target which we have for this 2,000 crores. So, will this be driven by the major markets, US and Europe, UK? And who will be the major driver for it?
I think all our markets will equally contribute to hitting these objectives. We do see, obviously, US being the growth driver. But as competitive it is, our UK and Europe front is also doing fantastically well. Our filings and new product launches are basically, it's not a market incentric. We do file in Australia, we are filing in Europe, we are filing in UK, and we are filing in US. So we do see all these investments that we have done globally to yield results and to make us achieve our objectives.
Thank you, sir. That's all from my side. Thank you.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Nishit Jain from Jain Family Investments. Please go ahead.
Hi, good evening. There was a query, as we see results, there is an increase in employee cost. So, can you throw some light, specific reason if there is a tremendous increase in employee cost?
Yeah, sure. So this increase has come from India and from the US balance sheet.
Yeah.
And the reason, of course, we have hired additional employees in US. So we have increased our headcount as we are gearing up for 100 million plus kind of numbers from US market. So we have increased number of employees in US. In India also, of course, last year being COVID, we couldn't increase our salary of our people. This year we have given them increments as well. So this increase was the result of both these actions.
Okay, and the second thing is, this is basically increasing due to the production side employee, or you can say maybe marketing employees. So we see a higher production or something?
It is across the board. It is across the board. So both marketing and production people, we have increased the salaries.
Okay. And is the management confident in front of when we see the operating margins to maintain 24 to 25% operating margins in coming quarters?
Yes, we will be.
And one more thing, I just want to check, is there any dividend or something declared by any of the subsidiaries in this current year?
Our UK subsidiary had declared dividend of, I think, around £1 million.
Okay. Okay, is that is the one which is reported in the results of this quarter, September quarter?
No, it was declared in the first quarter itself.
Okay. Okay, so that is all. That is all. Thank you.
Thank you. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Kamaljeet, an individual investor. Please go ahead.
Okay, thanks for taking my question. And my question is, what is the plant utilization as on date?
I didn't get that. Could you repeat that, please?
Okay, so, sir, what is the plant utilization as on date, or for the last quarter as well? You can let me know.
The plant, are you saying plant utilization?
Yes, sir.
Yeah, our plant is basically at 70% utilization.
Okay. And sir, any new filing in last 6 months or a year, or already we are waiting for the existing filing from the regulators?
So we are filing, we have filed a couple of NDAs, and we are still filing. We have a wish list of like I said, over 10 to 12 NDAs in the next 12 months.
Mm-hmm.
And we are at the same time expecting approvals. So hopefully we should receive some approvals in the next before March. Again, commercialization will take a bit more time once you get an approval, but we are expecting at least 2 NDA approvals hopefully before March.
Okay. Sir, how much freight and raw material is impacting the margin in the sense of, or either on quarter basis or year-on basis, or in a normal quarter?
I didn't get you. What did you say?
The freight rates high due to shipping charges and the raw material. How much it is impacting to the margin, and how much we are passing to the customer as well?
See, freight costs have literally been doubled, and normally we have freight of around 4% of sales, are our freight expenses. But now due to this hike, it has gone up to somewhere around 7 to 8%. So definitely, freight is impacting the overall margins. And on material front, it is again it's a mixed bag. Our gross margins have come down by almost 300 basis points in this year. So that is the impact of increase in raw material costs.
Okay, sir. In last 30 days, the shipping charges has been down across the region, in a sense, across the globe. So do we expect there will be less shipping charges during this quarter and going forward?
See, we haven't seen that happening in the sea freight as of now. So yeah, from China we have been hearing that the rates have started coming down a bit, but from India so far that has not happened. But I think let's see. We hope that from this quarter onwards it should start tapering down a bit.
Okay. Sir, new investment by the which is coming to already to the company. So any plan, anything which is already be discussed, or like you are working inorganic or organic growth, how it to be?
Yeah, we are basically working towards M&A strategy. We have been in dialogue. So we are looking at expansion in geography. So we are I do believe we will need resources and funds to consummate any transaction. And definitely we are looking at expanding our manufacturing capabilities in India, at the same time expanding our geographies in Europe. So definitely we would need funds to consummate those transactions.
Okay. And the last one is how many products we have a pricing power in the market as compared to our competitors?
Pricing power, did you say?
Yeah, pricing power of our product as compared to our competitors.
When you mention pricing power, are you saying in terms of which products?
Yeah, pricing power in the sense of if you are hitting down by the raw material cost, still you are increasing the cost of our product, and then still it is in the market.
all our products are still in the market. What is happening because of the volatility of the price increase happening of raw materials, packing materials, freight, everything is having an impact. Before we can pass it down to any of our end users, we need that to stabilize, because we cannot keep going back to our clients every week or every month. So once it stabilizes, because every week, every fortnight, the prices are still going higher, and at some point it will stabilize and probably start tapering down. But when it stabilizes, we can then look at transferring some of that cost impact to the end consumer. But right now we are absorbing that, and that's where the bottom line is being impacted.
Okay. Sir, what is the attrition rate as on date? Whether any major attrition rate for the technical staff or management staff going on?
No, we don't have any major or significant attrition going on in any of our geographies.
Okay. And whether company is preparing themselves for any technological disruption in the sense of, or it is helping in the sense of to enhance the efficiency of the deliverable?
Yeah, it's an ongoing process. So definitely it is like, work in progress. It is always there.
Okay. Thanks, sir.
Thank you.
Thank you. The next question is from the line of Arun Vaidyanathan, an individual investor. Please go ahead.
Yeah, I had a couple of questions. Due to various external factors, the bottom line is affected. But I just wanted to understand regarding the revenue growth. So compared to the last year similar quarter, the revenue growth is also less. So I just wanted to know how we are planning ahead.
Yeah, the revenue growth will correct itself. We do believe we will show we will hit our objectives in this year, in the second half of the year. The third quarter in terms of revenue growth will be better than the second quarter or the first quarter. And that is historic trends which we see because of seasonal impacts in the global market. We basically are in Europe and in US, and we'll normally see summer always lower and winter always higher. But again, this is a part of the cycle phenomenon, and we would see a better revenue translation happening. But one more point that we need to take into consideration when this global issue is happening. We were a bit more skeptical, and we tried to push out as much as potential sales starting or contracts starting to as late as possible, so that obviously when the cost is very high, you don't want to jump into something which will have a tremendous impact on your bottom line. So that is there partially where you are hesitant to get into a contract or a business deal where uncertainty of cost is playing presently, and you do not know how long this phenomenon will last, and that's what to some level of degree we have to push back contracts as far as possible.
Yeah. So as you said that we may not be sure at this point till what time this phenomenon will last. So since we have various molecules, so the molecules where the competition is less, is it not possible to pass on some of the cost?
It is possible, definitely, and it will happen. That's where in my earlier replies to individuals, we need the market to first stabilize. We are seeing price increases happening pretty much on a weekly basis or a fortnightly basis. We cannot go back to the clients every week and say, well, now the contract has to be changed, to this, the contract has to be changed to that. Unfortunately, it does not it does not happen the the way it does not operate that way. So effectively, we have to basically be more. So we have to wait for it to stabilize, and we are working towards passing the cost down to the end user. But it is a process by itself, and at the same time, we need it to stabilize before we know what the price is. Because you go at one price increase and you change the price, and then before you know, after another 20 days or 30 days, the price has gone up by another 20%, and then you're taking further impacts on your bottom line. So we want to stabilize before we translate. And if it does not correct, if the cost does not correct, then eventually the selling price will correct.
Okay. Just one final question. In the last call, we discussed regarding the backward integration into API. So just wanted to know some update on that.
So our products are under development. We have basically so far developed about 3 products. We are working on validation batches. So it's a work in progress, and we are working towards backward integrating our core molecules into API. I would assume our efforts are on, and I would like to believe that maybe 12 months down the line we would achieve some objectives of that.
Okay. Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Yogesh from Arihant Capital Markets. Please go ahead.
Thank you, sir, for taking the question again. Can you give a guidance on what would be the effective tax rate for FY22 and 23?
Yeah, I think effective tax rate should be in the range of 22 to 23%.
Sure. And can you throw some light on how is the competition in the US market as of now?
Did you mention competition in the US market?
Yes, sir.
It is cruel. To summarize, it is obviously it is getting desperate. But at the same time, obviously, everyone is trying to juggle with this cost, and that's where it is getting from bad to worse. When there is a destabilization happening in terms of cost impacts and pricing impacts, so it's a catch-22 situation as to who blinks first. And when you go for a price increase, that's where you are opening the potential of other companies who are sitting with material or who believe they're sitting on finished product to enter into your contracts. So it is not the ideal scenario to be right now, and that is where the US market is highly volatile presently. I do see this volatility continuing for the third quarter, because again, this is the time when you actually, if cost does not come down and you want to translate that into a price revision, that's where competition basically comes into play.
So in the US market, are you seeing some significant pricing erosion?
Pricing erosion, no. But there are price challenges happening because of oversupply on certain molecules which are not impacted in this pricing war. There are price challenges happening, and definitely maintaining market share in this volatile industry with this volatility becomes more challenging because, like I mentioned, when you are looking for a price increase, there is someone always there with sitting on stocks and with a short-term objective to basically destabilize you. So we are now very much in the US market, so we know the nature of the beast. You could put it that way. We know how the market, the sentiments of the prevailing markets and the clients. So we are basically keeping a close watch on that.
Sure. And just to understand about your raw material cost structure, so it would be helpful if you can share some thoughts around it in terms of which are the top two components in your raw material, as you told paracetamol. So what would be the top two components in your raw material, and any proportion of cost? What would be the proportion of cost or raw material?
A product like paracetamol constitutes maximum proportion of the cost. So it does.
So I think paracetamol and ibuprofen, in the pain management, pain management is the largest contributor for us in terms of the revenue. And in that pain management, paracetamol and ibuprofen are the molecule which has a larger share. So I think, of course, paracetamol, basically we do around our 15 to 17% of the total revenue comes from paracetamol API, and I think another around 20% odd comes from ibuprofen. So these are the two ones which are the largest ones.
Okay, and as you told that paracetamol is almost doubled, in recent times. So is it still the prices are increasing? What would be the trend like?
Yeah, the trend is it is increasing further. So right now it is very volatile.
And any view how it will, what would be a timeline for such increase? Will it settle around in maybe 1-2 quarters, or?
It should start settling from fourth quarter onwards. So basically we were expecting prices to stabilize by December. But again, in China, there are newer challenges which are coming up. And prices, in fact, have gone up further after this news of the power, shortages in China came on. So I think fourth quarter is something it should start stabilizing, or we will have a bit of more clarity that how it is going to behave in coming quarters. But we believe that fourth quarter onwards it should start coming down.
Thank you, sir. And last question on any capex guidance for 23 and going forward?
Right now, I think it is not the right time to give guidance because of this volatility wherein we are right now.
Okay, fair, sir. Thank you very much. Thanks.
Thank you.
Thank you. The next question is from the line of Shaimal Patel, an individual investor. Please go ahead.
Good evening, Mr. Mark. Good evening, Mr. Jitendra. Nice hearing, but not fully satisfied. So I just want to ask you a question. You may feel as blunt. Are you happy with the share price?
Honestly, we don't have much control on the share price, and we cannot say we are happy, but we understand the sentiments. We understand the volatility that is happening, but again, everyone would like a better valuation, definitely. But we are going through a turbulent time, and I can understand the sentiments to some extent.
Thank you. Thank you. I would request Mr. Patel to rejoin the queue. The next question is from the line of Manoj Matthew Jacob, a retail investor. Please go ahead.
Congratulations, team. I've just got two questions to you. One is on the shipping. Do you have contract rates, or do you go by spot rates?
So we normally we do have contract rates, and so normally we prefer a contract rate. We avoid spot.
Okay. And the second question is from what you said earlier, it seems that as regards the API backward integration, we are going by ourselves. We are doing it by ourselves. We are not going in for acquisition.
We are basically developing the product by ourselves, but M&A is a huge possibility. And if the ideal target comes in play, then yes, we are open to that too.
The last time you spoke, you said 12 to 18 months. So right now we can say 6 months is over. Can we say another 12 months?
I would like to believe so, yes.
Okay. Thank you. Thank you very much.
Thank you. The next question is from the line of Vaidyanathan BP, an individual investor. Please go ahead.
Good evening, sir. Just wanted to ask you, OrbiMed joined hands with us for a better purpose. Do you foresee any thing coming out of it? Because as such, we were doing well, but it made business sense maybe behind the scenes to join hands with OrbiMed. But seeing the current, their investment and their share price also falling down and things not looking too good as of now, do you foresee any challenges in that?
No, I don't foresee any challenges. See, OrbiMed has not come for a short-term basis, and they understand they have a board seat. We have discussions. They understand. They are into the pharmaceutical industry globally. They are not here to look at immediate outlook, but they are looking at the growth of the company and investing time and resources to make sure the 3 to 5 year horizon the company shapes up differently, and that's what our objectives are. Pharmaceutical is an industry which basically you got to invest today to see returns for 3 years, and they're aware of that. They know they share the same vision of what we are trying to achieve. So volatility in terms of this global phenomenon, in terms of pricing of the share pricing and all, will continue to happen. But if the company performs and continues to be on the road track, on the track, it will correct by itself, and the company will give the valuation based on. The market will give the valuation based on the company's performance eventually.
And my second question, this raw material dependency on China, how dependent are we in terms of a percentage or so, please?
We source most of our raw materials globally, and quite a substantial amount of it either comes from China or from India. The problem with China, they control, they monopolize not only the raw materials but the chemicals that go into the raw materials, the intermediates that go into the raw materials. So even if you are buying the raw material from India, the intermediate prices or the chemicals that go into making that, the Chinese have monopolized it and are basically holding the world to ransom and basically have increased the prices of that, thereby driving prices of even the Indian manufacturers who are supplying raw materials. So dependency on China, although I'm sure the talks have always been there to be less dependent on China and make India as a manufacturing hub, but it is presently we are still far from achieving that objective of being of not being dependent from China. So we are directly or indirectly still dependent from materials coming from China.
So is there any timetable or a plan with OrbiMed or through indirect acquisitions or direct acquisitions to ensure over a period of, now I'm talking over a period of say 3 to 5 years, as you have put it, to ensure that we are not as dependent on outside sources for our basic products and for our future growth, which obviously the products which would come into play. Would that be the scene? That would be the roadmap to our next level growth level, please?
Our level growth is in multiple areas. It's not restricted on raw material supplies. Definitely raw material supplies and backward integrating into raw material makes us stronger as a company, as a supplier, as a generic supplier in the market. It definitely makes us much stronger. But our growth strategy comes from different geographies, from organic, inorganic, expansion into different geographies. So it is, and obviously manufacturing capabilities. Our strength has always been manufacturing and servicing low-cost manufacturing base out of India. So our growth is basically going to come from, like I said, multiple points which have to be addressed and which we are working on parallelly. So in the backdrop, irrespective of what you may not see because of this volatility and bottom line, we still are working on R&D. We are still spending our money on R&D. You see our R&D expenses have gone up. And that is again to basically look at our global presence, to increase our product portfolios in the global market, and basically ensure revenue happens organically in certain markets. All these need the resources, all these need money, and that's where we are working on that. And OrbiMed is in tune with what we are doing at all stages. They basically also share that, like I mentioned, the same vision of what we are trying to create. And looking at a track history of how we have progressed and evolved as a company, I don't think there is a doubt or a iota of doubt in anyone that we won't continue growing in the same fashion. So if you look at us 5 years back and you look at us today as a company, we have evolved as a company. And if you look at us 5 years down the line, we will still evolve as a company compared to where we are today.
Thank you. I would request the current participant to rejoin the queue. The next question is from the line of Siyog Mirashi, an individual investor. Please go ahead.
Hello, hi. Good evening, Mark. Good evening, Jitendra. Thanks, for giving me the opportunity to ask a question. I have got a couple of questions. First is that we are right now, doing about sales of about 1,400 crores during the year, and you said that you have plans of taking it to 2,000 crores. I just wanted to know, what kind of, you said in a few years. So I just wanted to know what is the timeline for that? Maybe like 2 years, 3 years, or what kind of timeline are we looking at? And what would be in terms of geographies, like, USA, UK, is that where the growth will come from, or, or Australia, New Zealand, or rest of the world? Which are the markets or, which you are looking at?
So we do see US being the growth driver, like I mentioned. Europe is also going to be contributing in this growth. So when we talk of 2,000 crores, it's basically all our business strategies, emerging markets, Australia, Europe, and UK will contribute. If you want to know which market will contribute more, obviously I do believe US will be the growth driver, followed by UK and Europe, and then the rest of the geographies.
Okay. And in terms of, you said that, we are, as I said, we are at 1,400 crores, roughly, at 1,400 crores of sales, annual sales. Like, if you have to take it to 2,000, like, how many years, like, do you see that, like, a couple of years' time, 3 years' time? What kind of a timeline are we looking at?
So we have a benchmark of we've used the word within 3 years. We do believe we will cross that mark. But it may happen in 2 years also. I mean, it all depends on, approvals. It all depends on business models shaping up. So we are confident that we will achieve those objectives within that timeline. So it may be it could very well be much faster than what we say, but on a conservative basis, within 3 years or within 2 years, 2 to 3 years, I think we should hit those objectives.
Okay. And sorry, for final question. We know OrbiMed has made some investment in the company, right? So I just wanted to know, in terms of, what would be, how is there anything, like, how does, investment of OrbiMed help Marksans, what would be what is their role, do they have, in terms of, are they, there is an independent director, I think, who is part of the team. But in terms of, what is their contribution, in the company?
So they obviously get wealth of experience. We have board meetings, their contribution in our interactions with them on a monthly basis. Their global networking that they have for us to explore and identify M&As, in different geographies. So they do have expertise which over the years, they are into the pharma space. They have connectivities in markets which would add tremendous value to us. So obviously, we do see a lot of tangible and intangible values coming from OrbiMed, and they are great. They are great fun to be with. And they are holding a board seat, and they are adding value in all our discussions that we have with them.
Okay, so because they are they based in the US or or are they based in the US or?
Yeah, they're headquartered in US, but then they have an office in Bombay also.
Okay. Thank you.
Thank you.
Thank you. The next question from the line of Kamalji, an individual investor. Please go ahead.
Hi, sir. Just please confirm what is the mean wage hike for management staff as well as non-management staff?
Can you repeat again, please?
So recently you have done the wage hike, the salary hike for the staff. Okay. So
right.
what is the mean average for management staff and non-management staff?
See, for management staff, it was in the range of around 12%, and for non-management staff, it was between 8 to 10%.
Okay. Sir, as organization is thinking about organic and inorganic growth, and what is your hiring plan for next 1 or 2 years? Like how many employees you want to be hired, if it is either way, depending upon your strategy?
These are need-based decisions. So depending on the growth and the additional infrastructure what we are in the process of creating, the hiring will take place.
Okay. And sir, what management is doing for supply risk management perspective at strategic level? Obviously, if situation sustain like that, so what's the management view on strategic level? How they are managing their supply risk, as there is a lot of risk going forward?
See, we are adopting various mechanisms here. So ideally, definitely, we are trying to get into long-term contracts with the suppliers. But unfortunately, our experience here was that China, even after having a contract in place, they are not honoring their contracts. So these are the kind of volatility or experiences which we are having. But then anyway, basic idea here is to have a long-term association, to have a long-term contract, so that we can reduce the volatility.
Okay, sir. Thank you. Sir, Orbit, whether helping or assisting in existing operations efficiency as well or not?
No, they are not involved in the day-to-day operations.
Okay.
Their involvement is more into the strategic areas.
Okay. Sir, whether I think the organization has received the fund from the Orbit, whether utilization has been started for that particular fund or it is still in the niche stage?
No. Basically, we have not started utilizing the funds which we have received from them.
Okay, sir. Thanks.
Thank you.
Thank you. The next question is from the line of Yogesh Tiwari from Arihant Capital Markets. Please go ahead.
Thank you once again, sir. Just to understand what type of margins are there in prescription and OTC products, not for Marksans Pharma in general, but in general at the industry level, the margin range for prescription and OTC products.
Yogesh, it's difficult to answer that question because, again, it depends molecule to molecule. The prescription products are highly volatile. Prescription products basically revolve around demand and supply, and based on that, prices go up and down. Price challenges can happen anytime. In the OTC part, it is much more stabilized. You have contracts, so again, it depends on molecules to molecules. So it's difficult to actually pinpoint an average of both. Sometimes the prescription product, even you can't even sell it at cost. So and sometimes you can make a lot of money on the prescription product. So that summarizes that summarizes everything.
Sure. So just to understand, the OTC products, they will be having a lower margin than prescription products?
I would not, in general, thumb rule, that's the outlook, but I would not say so. I think it's a different segment, and you have to view it differently. Like I said, some prescription products you can't even sell it at cost. So which one is better? In those cases, you will say, well, OTC is better. But some of the prescription products you can sell it at a much higher price, and in that case, you may say prescription is better. So it just depends on timings, molecules, and market dynamics.
Sure. As of late, actually, the OTC component, the mix of OTC has increased while the prescription products has declined. So any reason, or what are the drivers for it?
Well, there's no reason. We are seeing more traction in the OTC. We are more focused on their product baskets are bigger. Historically, we were very evenly based in terms of 51% RX and OTC 49%, or sometimes OTC was 51, RX or 49. But we do believe the OTC will see up to 60%, 60-65%, and RX will be around 35 to 40%. And that's again, sometimes it is product portfolios which create that difference, and obviously market penetration that happens in certain molecules, and our focus also, because we are basically growing as a company, and we do see traction in that segment.
Sure. And your views on basically what we understand is that you are looking at asset acquisition. That is one thought behind the management. So if you can give your top 2 priority areas where you will be looking for asset acquisition, the top two or three priority areas.
Areas? Are you talking of areas, or are you talking of?
I'm talking at the company level.
So, like I said, we are looking at when we look at M&As, we look at the objective is number 1 to increase manufacturing capacity, capability. So we are looking at that as one objective. The second objective is obviously to look at geographies, and Europe is a part of our geography that we want to expand. It was discussed in the previous Concalls also that we are looking at different geographies. So definitely prominent geographies, if you ask me, it's Europe. Not saying that we may also get M&As in different geographies, but right now our wish list will be Europe, and obviously manufacturing capabilities.
Sure. And we did an acquisition time labs, quite a few years ago, where we wanted to actually cut the distributor chain. So just want to understand, if you can share any synergy, the synergy we are getting from it, and has it led to increased margin in the US business because of cutting the middleman basically?
Well, it's helped us to achieve objectives of market penetration and dependency and being more independent, creating a footprint in the market. So a lot of intangible values have come. In terms of margins, I think with that a lot of cost comes involved. So I think when you acquire a company and an infrastructure, you need to look at a longer objective. You don't look at a short-term objective and say, I just want 50 million, or I want to do 100 million. We want to do 200 million. So you have to keep increasing your infrastructure base to achieve those objectives. But it is helping us in terms of our front end. It is helping us in terms of market penetration. It is helping us in terms of an identity into a market that we want to establish and grow.
Sure. And lastly, just one confirmation, since we have OrbiMed, so it's like they would be that would be one of the main drivers for they will help us in taking decisions on M&A and other things. That would be their major contribution, since we are looking for acquisitions, so they would be a major consultant in terms of that. That would be the idea.
So Yogesh, by now OrbiMed is working closely with the company. Let's put it this way. That said and done, they are not going to work for the company, but they are working closely with the company. They have global networks. They add value in terms of connections, in terms of identifying potential M&As. But that does not mean we are just going to do what OrbiMed says. It is a teamwork. We are on the board. We do brainstorm everything that is available to us. Whether they have got it or whether we have got it, that's not the criteria. It is basically looking at geographies and what the company needs. But definitely OrbiMed's networking is absolutely fantastic and good. And I think they will add tremendous value there, that is certain.
That is very helpful, sir. Thank you. Thank you for it. Thanks.
Thank you. Ladies and gentlemen, due to time constraints, it was the last question for today. I now hand the conference over to the management for closing comments.
Thank you everyone for participating. I know it's a busy weekend. I'd like to thank everyone out here, including Jitendra and Chandrila, for organizing this call. I'd like to wish you all a great weekend and hope again you and your family are safe and be safe at all times. Thank you.
Thank you. On behalf of Centrum Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.